to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon and Yellow Tunnel. And today I'd like to go over our weekly market review. Today we're going to concentrate on how to profit from the FOMC uncertainty and the meeting notes from Jerome Powell. For those of you who are new, this is my brief bio. I was Executive Vice President and Head of Technology at Options Express from 2007. From the 1999 to 2007, since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I've been trading my own money and managing my own money over 15 years, mentoring and teaching Yellow Tunnel and TradeSpoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and computer science. Please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest current market conditions. I'm not a financial advisor. I'm not registered with FINRA or OCC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Right, so today, before we go over the FOMC decision and the interest rate decision, I want to go over the scenario visualization. If you're a part of our live trading room at TradeSpoon, we always, before the market, we do meditation, 5-minute meditation where you do the exercises. And the second thing, we're doing different visualization scenarios. We're looking at the positive outcome scenario visualization and the negative, sorry, that should be negative outcome scenario visualization. So let's go over for current market condition, the positive and the negative scenario visualization. So now I'm looking at the stock forecast toolbox. I'm looking at the 10-day prediction, and I'm looking at the spiders. Currently trading at 298.40. Today was as high as close to the 300 level, 299.63. Market gap from the 298 level. Previous close was at 297. So we have a pretty large move based on the dovish tone from Powell in terms of the interest rates. So interest rate decision, FOMC will meet at the end of July and will decide whether quarter percentage point or 50 basis points of interest rate cut is warranted. So you have two scenarios. If you believe interest rate will be cut and the market will break 300 level, that's one outcome, positive visualization. If you believe in the market is going to continue going higher. The negative outcome would be if the interest rate is not cut at the end of July and the market actually sells off, and that would be a negative visualization. Let's see how you would structure your trade right now. So looking at the next 10 days as we are approaching the FOMC decision, that based on the current data, model predicts the stock market to trade in the range between 294, 295, and 300 level. Today we reached 300 level, we didn't breach that. Potentially you can overcome 300 level and overshoot to 303 level, and on the downside potentially overshoot to 292. So as we are at 300 level, the positive scenario is that if you go long right now, the market can go up another 3 points, so 1%. The negative case scenario right now, if the market is at 300 level and it reaches the 292, then the market can go down by 7 points. Or 8 points, so maybe 2%. So you have 1% to the upside, 2% to the downside. How do you structure the trade in the time of the uncertainty? I'm looking at the spider chart. We are touched 300 level today for practical purposes. So if you believe that the market is overbought, and that's my outlook on the market right now, I think the market is overbought. I'm structuring my trade where I'm raising cash and I'm going and I'm reducing my exposure to the market. I'm still bullish on the market, but I'm reducing the exposure to the market and buying hedges. And we'll go over different hedges that you can do, such as buying spiders puts or VIX calls, or you can buy gold. So in my case, the negative outcome, if there is an interest rate cut, maybe even 50 basis points, there's 25% that the interest rate cut will be by 50 basis points, then my negative visualization that the market will breach 304, 303, 304 level and continue to go higher. And I'm ready, as long as I am prepared for that scenario, even though I think this is a less likelihood and has a lower probability of moving in that direction, I'm ready. I'm able to visualize that decision. I'm reviewing that market, and on August 1st, I'm closing my eyes and looking into the future, and I'm prepared. And based on the science, as long as you do these exercises and you prepare for both case scenarios, that will make you a better trader. The negative case scenario in my case would be that the market, that there is so that's negative when the market rallies and interest rate is cut, if I'm bearish. And if the interest rate will not be cut, and most likely then the scenario, the positive outcome in my scenario would be that the stock market will sell off and reach potentially 293 or 290 level. So I'm looking at the risk versus reward. I'm looking at the odds of each of the outcome, and I'm structuring my portfolio where I'm prepared for both. If the market continues going long, well, overall, I'm still positive because my portfolio will grow and just not as much. And if the market sells off, my portfolio will not sell off as much as the market because I have hedges and I am prepared for the scenario, for the negative scenario, even if the market continues to go higher. So how can you, so cannot control outcome of single event, right? You ultimately don't know what exactly is going to happen at the end of July. You can put odds in terms of one scenario or the other. In my case, positive scenario, market sells off, corrects, and reverts back to 295 to 290 level. Negative outcome, market is going to continue going higher above 305 level. So self-aware and going through these visualization exercises are very important. How do you hedge your portfolio? You look at support and resistance level. I just went over the Bollinger Band. If you see market is hovering over upper band of Bollinger Band, consider it's overbought. If it reaches 50 days moving average, 200-day moving average, it's oversold. You structure your trade with favorable risk versus reward profile. If you believe that the market is overbought, then you can raise cash. You can sell your long position, you can put short position, you can buy VXX, you can buy SPY puts, buy treasury, buy gold. In general, the consensus is have 30% of your portfolio in cash, and you can also sell calls against your stock if you manage in larger portfolio. That's all I have for today. I encourage you to register at Yellow Tunnel under Quick Navigation. We have upcoming webinars. We also have blog and recorded webinars. So you can see these 5-minute video, 1 hour video under recorded webinars. This is from last week. I'm going to post today's webinar shortly. Thank you very much and have a great day.